And as the world questions the future of the dollar, Africa is quietly looking back to the one thing that never loses value: gold. Centuries ago, caravans moved across the Sahara loaded with gold from Ghana, Mali, and Songhai. It was African gold that fueled Europe's Renaissance and built the first global trade routes. The continent's wealth was legendary, so vast that when Emperor Mansa Musa visited Cairo in 1324, his gifts of gold destabilized local markets for years. But by the 20th century, that gold no longer worked for Africa. Colonial powers extracted it, stored it in foreign banks, and used it to back their own currencies. When independence came, African nations inherited currencies tied not to their minerals, but to foreign treasuries. The dollar became the standard. Gold, once Africa's strength, became a statistic on someone else's balance sheet. In 1944, the Bretton Woods Agreement fixed global exchange rates to the U.S. dollar and the dollar to gold. That system gave America unparalleled influence. Trade, energy, and debt all settled in its currency. When President Nixon ended the dollar-gold link in 1971, the world entered the era of fiat money, currency backed only by trust. Trust in the American economy. Trust in its stability. For decades that worked. But by 2025, U.S. debt had passed $37 trillion, and inflation had eroded confidence in the greenback's long-term strength. Countries began asking a dangerous question: why keep all value in a currency someone else prints? Africa, rich in the very metal that once defined money, began to answer. Across the continent, central banks started increasing their gold reserves, the highest collective rise in over 50 years. Why? Because gold is more than a commodity, it's insurance against volatility. In Ghana, new policies required part of every large-scale mine's output to be sold to the central bank. In South Africa and Tanzania, gold refiners were expanding capacity so more of the continent's bullion could be processed locally rather than shipped abroad. And in Egypt, vaults once reserved for foreign currencies were being restocked with gold bars from the country's eastern desert. The message was simple: before you can trade freely, you must first secure value at home. In 2022, global fuel prices spiked, and Ghana's foreign exchange reserves plummeted. Importers struggled to buy fuel in dollars. Inflation surged. So Accra did something bold. It offered to pay for imported petroleum with domestically mined gold instead of dollars. Critics called it experimental. But the plan stabilized Ghana's reserves and showed the world a new model: real assets for real goods, not borrowed currency. By 2024, the government reported millions saved in forex costs, and other nations quietly began studying the blueprint. Further south, Zimbabwe, long trapped by hyperinflation, introduced a new currency in 2024 called the ZiG, short for Zimbabwe Gold. Each unit is backed by gold held in the Reserve Bank's vaults, redeemable for its equivalent value. For the first time in years, the local currency held its ground. Shops began listing prices in ZiG, savings accounts reopened, and foreign investors cautiously returned. It wasn't magic, it was math. When paper is backed by metal, people trust it. The ZiG became Africa's quiet case study in rebuilding credibility through gold. Afreximbank and the gold-backed trade revolution at the continental level, the African Export-Import Bank, Afreximbank, was designing a system even larger in scope. Under its trade settlement programs, nations can use gold or local currencies to clear part of their import bills, reducing exposure to dollar volatility. Afreximbank's African Commodity Exchange proposal envisions futures contracts priced in African currencies, but collateralized with continental gold reserves. If successful, that would mean a Ghanaian cocoa exporter and a Kenyan importer could settle in cedi and shilling, secured by the same universal asset, gold, without routing through New York or London. It's not the end of the dollar, but it's the birth of options. When African members joined the expanded BRICS group, gold quickly entered the agenda. Discussions in Johannesburg and Moscow focused on a potential BRICS settlement unit, not a new currency, but a bridge for trade among member nations. One of the models under review: link it to a basket of commodities, led by gold. For Africa, that's strategic. It means the continent's mineral wealth could serve as both collateral and capital in a global system that values tangible assets over debt notes. Every time a Western bank freezes assets during a sanctions dispute, countries take note. Every time inflation hits double digits, investors seek shelter. Gold provides that shelter. It cannot be sanctioned, hacked, or printed. It exists. That permanence appeals to African policymakers navigating a volatile world, one where access to dollars can vanish overnight. By building gold reserves and local currency payment rails like PAPSS, Pan-African Payment and Settlement System, Africa is insulating itself from external shocks. The strategy is not isolation, it's independence. A new generation of African economists and entrepreneurs is redefining what wealth means. They see value not in paper promises, but in production, minerals, food, energy, and data. Gold is the anchor that gives those resources credibility on the world stage. When investors know a currency is supported by real assets, confidence follows. That confidence draws capital, which funds innovation, which fuels growth, a loop that no external currency control can easily break. In 2025, reports from the World Gold Council confirmed that African central banks collectively increased their bullion holdings faster than any other region. Analysts in New York and London began calling it the continental hedge. Meanwhile, in the Gulf and Asia, trading houses started offering African clients settlement discounts for gold collateralized deals. Bit by bit, Africa's gold was regaining its old role, not as tribute to others, but as leverage for itself. From Accra's refineries to Harare's mint, from the mines of Mali to the vaults of Cairo, Africa is reconnecting its money to something measurable. It's not about returning to the past. It's about ensuring the future cannot be devalued overnight. The dollar system may still dominate global trade, but beneath it runs a new current, a glint of gold linking African economies in quiet cooperation. The world may not yet see it, but the foundations are already in place. Once, gold was Africa's gift to the world. Now, it's becoming Africa's shield, a weapon of stability in a storm of global debt. 2025 is a year of paradox. The U.S. dollar remains the world's dominant reserve, but cracks are showing. Record debt, political polarization, trade sanctions used as financial weapons. Across the Atlantic, emerging markets are rewriting the rules. China and Russia shift to yuan-based oil trade. The BRICS bloc expands to include Egypt, Ethiopia, and South Africa, all resource-rich, all searching for stability beyond the dollar. Amid this transformation, Africa sees opportunity to stand on its own terms for the first time in modern financial history. Under the African Continental Free Trade Area, AfCFTA, 54 nations have agreed to trade freely, aiming to turn the continent into the world's largest single market. But to make it work, Africa needs one thing: a reliable financial system not hostage to foreign currency swings. So while the West debates interest rates, African finance ministers meet to talk about gold-backed stability, digital settlements, and resource-based credit. A quiet financial revolution is unfolding, one grounded in real assets, not debt. The Pan-African Payment and Settlement System, PAPSS, is the bloodstream of this transformation. It allows a business in Kenya to pay a supplier in Ghana instantly, using their local currencies. No dollar, no SWIFT delays, no costly conversion fees. Behind the scenes, African central banks guarantee settlement using pooled reserves, increasingly backed by gold. That's the hidden genius. The digital rails of the 21st century are being laid on the timeless foundation of gold. Several African fintech startups are already experimenting with tokenized gold, digital units backed 1:1 by physical bullion stored in African vaults. It's gold you can send across borders at the speed of data. In Nigeria and South Africa, pilot programs link gold tokens to agricultural and mining contracts. In Kenya, mobile wallets like M-Pesa explore interoperability with gold-based digital units. And in Egypt, a new gold-backed savings platform lets citizens hold wealth insulated from currency devaluation. Each of these moves chips away at dollar dependency and builds confidence in local value storage. When South Africa hosted the 2023 BRICS Summit, one idea dominated private sessions. What if trade between members could be settled in gold or commodity-backed credits instead of dollars? Africa's participation made that question real. With its immense reserves of gold, cobalt, lithium, and oil, the continent could anchor a multipolar financial order, one where assets, not debt, define strength. Today, Egypt, Ethiopia, and South Africa represent Africa in BRICS, but informal coordination with Ghana, Nigeria, and Tanzania shows momentum is continental. The long-term goal isn't to kill the dollar. It is to build a system where Africa never again has to beg for access to its own value. Across ministries and central banks, quiet conversations are turning into policies. Ghana's model of domestic gold sales. Zimbabwe's gold-backed ZiG. South Africa's expanded refining and bullion custody programs. Uganda's exploration of gold reserve integration into currency backing. Together, they point toward a continental gold reserve network, a cooperative shield that would let nations back their currencies, settle debts, and stabilize trade without external intervention. Imagine a Pan-African reserve asset backed by gold, minerals, and energy, serving as the continent's collective insurance against shocks. That's no longer science fiction. It's being discussed in Afreximbank boardrooms right now. While Africa builds with gold, the West drowns in debt. In Washington, the debt clock ticks past $37.8 trillion, numbers too large to comprehend. In contrast, Africa's debt-to-GDP ratio, though varied, is grounded by real assets, minerals, oil, agriculture, tangible wealth. For the first time, Africa's resource base isn't just fueling exports. It's becoming the foundation of monetary strategy. This shift redefines the global economic map, from dependency to self-determination. Financial analysts in London and New York are taking notice. Gold purchases by African central banks have surged to historic highs. Western think tanks warn of de-dollarization creep across the global south. But Africa isn't waging war, it's hedging risk. By diversifying reserves into gold, Africa gains bargaining power in trade, loans, and investment negotiations. And that leverage changes everything. When your reserves shine with gold, you don't negotiate from weakness. The gold revolution isn't confined to vaults and boardrooms. In Ghana, small-scale miners, often marginalized, are now linked into official buying programs, ensuring their gold supports national reserves. In Kenya and Rwanda, gold-backed cooperative funds are teaching communities that savings in metal can outlast inflation. And across Africa, new jewelry and bullion investment startups target the rising middle class with a simple message: hold what holds value. This grassroots dimension makes the shift unstoppable. When citizens trust their own assets more than foreign currencies, sovereignty stops being theory, it becomes culture. In Washington, economists downplay the trend, calling it symbolic. But in Beijing, Delhi, and Riyadh, policymakers quietly applaud. They see Africa as a vital node in a new multi-currency ecosystem, one based on trust, trade, and tangible value. Western financial media may still headline the dollar's dominance, but behind the scenes, the world's monetary currents are shifting, and Africa's gold is part of the tide. The story of gold and the dollar isn't about rivalry, it's about evolution. The 20th century was defined by paper promises. The May 21st be defined by physical credibility, and Africa's abundance of gold gives it a strategic seat at the table. As global trade digitalizes, Africa is preparing to trade digitally, but with the integrity of gold. It's a union of the old and the new, metal and code, mine and microchip. That's Africa's genius, turning heritage into innovation. Gold doesn't just store value, it tells a story of trust, of patience, of power. For centuries, Africa's gold built others' empires. Now, it's building Africa's independence. The screen fades to a map of Africa glowing in gold veins stretching from Johannesburg to Cairo. A line appears. The age of borrowed money is ending. The age of real value has begun.